Hi there, this is Joe Paulson with the AgView Pitch, and today we got Matt Benett helping me with the weekly market outlook. How's it going, Matt?
Going well. How are you doing?
Oh, we're doing all right. Been busy dodging rain showers and getting stuff planted. How's things down in your neck of the wood?
Yeah, I mean, last weekend we had about 2.25 inches of rain where we need to farm. And so we've got basically close to half of our crops planted, been in the ground 2.5 weeks. Corn's all up. Most of the beans are either up or pushing up. Missed a little shower last night, which most guys in our area were kind of praying for. I think there's some, as always in a wet spring, there's some folks that have pushed it. I've pushed it before. It's just one of those things, as the calendar gets farther along, you start to get a little nervous about how many more opportunities you get, and so people miss a little bit of rain last night, which I think they were frustrated about, but at the same I mean, we're looking at quite a bit of rain in the next week to 10 days if this forecast is right. So, I mean, I don't know when we're going to get done. It might be a while.
Yeah, we're kind of in the same boat up here in Northern Illinois. We had a pretty good run here about a week, 10 days ago. I put some beans in about 2 weeks ago. Those are just about ready to pop out. We got about half of our corn, a little over half of our corn in. I'm quite a ways ahead probably of most of my neighbors here. Um, it's funny that nobody wanted to plant because it was cold. I planted corn with you know, frost on the ground. I don't know how many days in a row, and
Mhm.
but it was fit.
Yeah.
So I was going. A lot of people sat on their hands. Well, now all of a sudden it's May. We got a wet forecast, and people are really starting to panic a little bit. So
Yeah. No, I agree. It's definitely probably getting close to time to panic. I mean, people keep asking me when this thing's really going to take off just on weather. And I don't know. You look back to a year like, 2019, we started around the 12th, 13th of May, market rally like gangbusters for, about 6 weeks, yeah, we are, we're ahead of 2019 though. So, but are people going to panic? Yeah, I mean, there's parts of the Corn Belt that are really high producing parts of the Corn Belt, that are going to be significantly behind pace this next Monday, because, like in my part of the world, nobody turned a wheel this week. So, and I don't know that anybody's going to. It's just we're just not there. And so, you get east of us in Indiana and Ohio, and there's a lot of folks haven't done anything yet. So, certainly feel for those folks.
I know Andy Ruby. I was texting with him the other day, and it looks like they're just starting to get really rolling, and they're in that northeast quadrant of Indiana there. So there's quite the spread. And then you got Chris, who finished planting not yesterday, but the day before. And
Mhm.
they've been in a pretty droughty area, but they're catching up on rain. And I see that the drought monitor is reducing a lot in a lot of these spaces, but it's also starting to delay planting. How's
Mhm.
that going to impact the market? Or seems like we're starting to build a little bit of a weather premium.
Yeah, I think there's some weather premium. I think there's also other stuff going on. The dollar struggling, certainly coming back off of some of the strength we've seen recently. Definitely has been a boon for commodities. I mean, the interesting thing about corn and beans over the last month or so, there's been a fair amount of commodity buying in all across a lot of sectors. We saw the gold market make an all-time high, and silver raced up to $30, first time in a long time we'd seen that. And so you kind of sit here, and corn and beans are the people at the dance, that haven't been asked to dance yet, and it's like, hey, finally, I think the commodities take a look at corn and beans and say, hey, with this being a less than ideal spring, maybe we should reevaluate this extreme short position. And so I've talked about this a lot lately. Not that I wanted to be real bullish on fundamentals. It's just a matter of the funds, the mutual funds, money managers. Those guys are sitting here looking at this thing, saying, "Hey, we want to be able to react if we have a hot and dry pattern. The first 3 weeks of July, and how are we going to do that if we're short 220,000 bushels or contracts of corn? It's pretty tough to do, and they're still over 100,000 short on beans. So I do believe there's a fair amount of short covering going on, and it's got a lot to do with this weather. But I think it also has to do with currencies, what's going on in Brazil. The areas are either feast or famine. You've got extreme dryness in the central part, whereas the southern part of Brazil is just absolutely dealing with floods, massive floods, like 8 to 10 inches of rain in the last 2 weeks. So, it's pretty tough whenever you're trying to harvest.
Yeah, with that kind of rain, that's always quite challenging to have that kind of wetness.
Yeah.
Um, you know, the going back to the short coverings, we've seen a little bit of buying from the funds, getting more closer to neutral, but there's still a lot of volume there that could flop if we continue to see wetness, correct? I mean, the tailwind could be there.
Oh yeah. Yeah. I mean, what I've told folks is that, you come in here, let's say on Monday morning, and the rainfall over the weekend was as good or better than advertised. People are going to expect, hey, this market's really going to take off and go. But what's really going to be what the market watches is, do you have that tandem of wet weather over the weekend plus a wet forecast still? I mean, most people's 2 week forecast, they'll tell you throughout the Corn Belt don't look all that great. The maps that keep getting put out, you're talking an inch to 2, 3 inches of rain across large production areas. And, we were kind of like you. We started planting a little early. Actually, it was very warm when we planted. I mean, we are looking at 65 to 67 degree, temperatures, soil temperatures. And so we said, let's go ahead and go with it. We know we're going to get some rain and maybe some cold temps. And we had an absolute just toad strangler. It was only 6 or 7 tenths, but it came fast, and so we're like, oh, here we go, and then several nights in a row in the 30s. But you know what? The corn came up, so I don't know. I think that what will happen is you'll come in next week, and I got to think that if you stay with a wet forecast, the funds may very well liquidate a pretty good chunk of that short position. Now, keep in mind, the producers holding on to a lot of corn. One feature that I saw here on Friday, as the market was trading, is that some of your front months were struggling to rally as the day wore on, and I think that's very strong evidence that there's a fair amount of hedge pressure that's coming into the market. And you're hearing about people seeing basis widen a little bit. Well, it's because people are rewarding the market on a big rally, and that's a feature we all expected would happen. I just didn't think it would take this long to see it occur.
It's crazy how much is not sold yet. I know my local elevators is pulling their hair out a little bit because they can't move anything. The farmers that own the corn in the elevator just are still holding on to that. What the hell they're waiting for, I don't
Hmm.
know. Paying commercial storage is nuts, but I mean, they're just starting to pick ground piles up around here.
Hmm.
And and that's extremely unusual. I mean, usually by the end of January, all ground piles are gone here, and
Yeah.
we're just starting to see those get opened up. So
Farmer's been tight-fisted. Farmer made a lot of money in 21 and 22. And so the 23 crop, of course, for most people wasn't super profitable. It just wasn't. And so I think a lot of folks said, you know what, I'm just going to hold on to this stuff. I'm going to see if something happens. Got a little money in my pocket. I think the unfortunate reality, of course, is that 23 and 24 are going to go down as probably the two most expensive crops we've ever put in. Now, obviously, with the inflation and things going on, you would expect it would get more expensive to put crops in. But you and I both know, that if commodity prices move lower and continue, let's say we move towards $4 next fall, which is possible. The 25 crop will be cheaper to put in the ground than the 24 crop, and so it's not just because you're going over a course of time that crops are going to be more expensive to put in. So it needs to be noted that you have two straight very expensive crops to be put in the ground. And that's going to eat into people's pocketbooks. We know that. Liquidity ratios are definitely going to take a bit of a hit, after what we've seen. It's tough. I mean, it's just what happens though. High prices cured high prices, and we'll see the opposite of that here occur at some point. And yeah, we're getting a rally right now, but even if you get this thing to $5, there's still a lot of people that are telling me in my world that they're awful thin on profit margins for the 24 crop. It's just going to be really tough to make money given how much they've got invested.
I've been doing a lot of profit managers here over the last couple of months and getting to see a lot of people's financials and where they're at. And most all of them are, they're wanting to put in 450 as their cash price. That's what they're hoping for.
Hmm.
And $12 beans. And people seem to be kind of holding things together at those levels. And we're just starting to kind of see where you can you can pencil in some 450 cash just
Yeah.
now.
Yeah, I think that if you have that with average or above average yields, you're going to be in pretty good shape. Obviously, what's scary for most is, if they lock too much in at levels like this and then don't raise a crop, that puts you in a tough spot. So we've been preaching flexibility, keeping the some options at your disposal to where you don't lock yourself into a situation that you can't get out of. Because yes, things look pretty good at 450, but we're making some assumptions. We're making assumptions on yield. We're making assumptions on what drying costs might look like. We're just making a lot of assumptions, and so we certainly have to be very cautious as to over assume. When it comes to some of this stuff.
I have tended to be a bird in the hand versus two in the bush type of guy, and always aggressively protecting the downside. And I was really overly aggressive selling corn in that $5 to 470 range, and
Hmm.
um, ended up buying some calls on a portion of that. But, I'm sitting, probably close to 67% sold on corn. Well, now we've got
Yeah.
this tailwind coming, and what does the guy do? Does he buy some of that back on the board? Does he buy some calls to protect that, or do I just look at it that um, I've got a good average going, and I've reduced some risk, and just sit back and see what happens here? And
Yeah.
you know,
It's going to be different for everyone, but I would say, I don't like trying to get too cute with the market and getting in and out of stuff based on trends. I would rather be in a situation where, hey, I know my break even's whatever, 450. Let's just say 450, like folks said. And, now you're sitting here with, maybe your average fall price is 475. And you say, well, boy, I don't know. This isn't going to look very good if the market rallies sharply. Now, if I'm going to cover some of those sales, I don't think a guy like you is probably, or, guys that we work with, is going to be super concerned about the rally to 510 or 520. They don't want to miss the rally to $6. Okay. So,
correct.
if you're sitting in your situation, I think you step in and maybe spend 15 cents, on a call or call spread to capture a decent chunk of a rally between maybe 510, 520, and $6. I don't want to give up too much of a good thing. And so, if I want to cover some sales, I don't see any issue with that. I don't see any reason to cover all of them by any means. I just think that a person needs to base all their decisions on where break evens lie, lock in income as much as possible, and then keep some flexibility just in case, some of the assumptions we made were wrong.
That's phenomenal perspective. Talking about the rally that I'm going to be really disappointed that I missed, and that's excellent perspective. Um, so planning progress, nationally, where are we kind of at versus normal? I have had my head in a sprayer and a tractor here the last week, and haven't really been paying much of attention.
Yeah, as of last Monday, 27 and 18 on corn and beans. Nationally, corn, we're actually a little bit ahead of pace. I mean, beans, I think, are at or ahead of pace. Um, but I think what has got the market's attention, of course, is Illinois, Indiana, Ohio. Illinois was 25%, but there's a lot of years Illinois is done right now. I mean, it's just like Iowa. There's Illinois and Iowa. If you get a window, you can put the crop in the ground so quickly, and everybody knows that. And that's part of the reason why the market's always so slow to react to planning delays, quote unquote. Uh, I don't expect that you're going to see much advancement in Illinois, Indiana, or Ohio on next Monday's crop progress report. It's just not going to be likely to see that. And so, I know that a lot of folks have said by the 10th of May, you really need to have this corn crop 50% planted. 27% was where we were at last Monday. I don't see us being over 35% this next week, but then that following week, I think people are going to be watching pretty close. If their forecasts verify, I think you're really going to be hard pressed to have half the crop planted by the 10th of May. And if that's the case, I think the market will pay very, very close attention.
I know that I wonder if the American corn farmer after the 2019 thing, the 2019 thing that I had about 35% prevent plant, and it by the time it came around and the dust settled, that hurt me pretty bad. I mean, the prevent plant money that you get from the crop insurance, it pays the rent. It was able to get a cover crop on it. It was able to take care of it. But when you take a third of your acres out of production and it's not contributing to the machinery, it's not contributing to the return to management, that really hurts guys. And I think a lot of people saw that. I wonder if they're going to be a lot more aggressive about getting that crop planted than they were back in 19.
I think that if you would keep all things equal, yes, I would think that your assumptions would be correct. The thing you got to remember is in 2019, you rallied over $1 from mid-May into the end of June. And so there was a ton of incentive to get that crop in the ground. It's just some people said, I can't make it happen.
Mhm.
2019, in my opinion, is a lesson that we could study for a long time on a variety of fronts on decisions growers made. And then the USDA coming in June 30th and saying, the farmer intended on planting 100 million acres of corn, but they didn't get it all in the ground. Super confusing report. It sent the market into a tailspin. And quite frankly, most of us in this business that were well aware that we didn't get near the corn plant and we need to get planted, we didn't have, I guess, verification that we were correct until the September quarterly stocks report of 2020. I mean, that's when we finally started getting a handle on the fact that the corn wasn't there. Where did it all go? Well, where it went was we didn't have a crop in 2019 that was worth a darn, and a lot of it was because we didn't get it planted. So, yeah, I think that the producer taking prevent plant certainly isn't number one option, and I agree with you that they might be hesitant, but, 450 and 5.25 probably change some thought processes. If it goes to 5.25, by all means, I think guys will try to get the crop and gals will try to get the crop in the ground, but a lot of it'll have to do with price.
I think part of it too was a lot of us were rookies with the prevent plant in the I states here and the pros up there in North Dakota that I mean 3 out of 5 years they've got some version of that or whatever
Yeah.
that number is. So I think we all kind of got our teeth cut a little bit
Yeah.
getting through
Got a
that.
lesson
Yeah.
in education.
Is there anything else, Matt, that we haven't covered that you think would be good perspective for the listeners here? What do you have?
No, I think we've covered most of it. Overall, I think as a producer here, this market it could definitely get moving. One thing that I would be very cautious of is to get bullish if we continue to rally. And I think we need to look at rallies as opportunities to manage more risk. And with that being said, let's not get lost on what I said earlier, is to stay flexible, and so all marketing plans, in my opinion, are not created equal. I think every grower needs to understand their operation as well as they possibly can from cost standpoint. Once they do establish that, then they need to work with someone that can help them, identify a couple, three different strategies, things that can work on their operation that will not only lock in income, but give them the opportunity to participate, if we get into some sort of a rally that none of us are expecting. So the last thing I'll say is, even though the fundamentals of this with a crop don't look all that rosy, the market still could rally. We don't know what global events might happen. It is an election year. There's all kinds of crazy stuff that could happen in the next 6 months. So let's stay flexible and not put ourselves behind the eight ball.
Excellent advice, Matt, and I really appreciate your time today, having a visit with me, and thanks everybody for listening.